Welcome to Trading Lounge and the Bitcoin report for Monday 31st of January. And look, there's not a lot to say about Bitcoin today. But let's go in and have a look anyway. This is our primary count, and it would be nice if, because we took out the top here, as I've mentioned before, that as an expanded flat we'll take out the low here. So that's kind of what we're looking for. There's some things that I do know and some things that I don't know. So I know that the move up here is corrective. So let's go in and have a little bit of a closer look at this. Because it's a wave 4, it's just a little bit tricky how it's going to play out. Now technically it should just come back up to the wave 4 of one lesser degree. However, the 40,000 is such a big number, and we can also see it's being tested here, and it's quite natural for when a market moves through a large number, or any number really, that it will go back and test that. So that's what we're looking at, but at the same time here we can see that it's struggling a little bit as well. So what we do know is that the move up through here, we can count that in 5 waves here, and then a correction, and then another move up here. Now because it's dropped down below the first 5 waves up here, this little low here, well, that forces it to be a corrective pattern in terms of an A and a B and a C wave here. So we can look at this as an A wave here as a starting point. We also know that wave 4s can get rather complicated. So this market could dance in different ways. So let's go in and have a closer look at this still. So just on the 1 hour chart here, last time we spoke we were down here at one of these lows. I think it was even this one here. So we were looking for the market to push up at that point. So it has pushed up, but like I have to say, when you go into wave 4s, you're slightly moving into the guessing game. So just, yeah, I mean, be very careful here. What I say certainly may not happen at this point. So with wave 4s, there's 11 or 12 different types of corrections, and most of them can happen in wave 4s. So we just need to be a bit patient until it unfolds to a point, or rather matures, and then we go, oh, that we can see it now, and then we can make our move on it, because trades are based off confidence that you have in what you're looking at. And do I have confidence to call it up further? Well, yeah, maybe, so it's not really, I don't have a really good trade set up for this. Now, as a quick sort of trade here, then you could take out, if this top was breached here, you could trade through here and get out at the 40, because we could look at, if that was breached here, that top there, then we know that this is a a corrective pattern if that top is taken out, but you'd have to get out here for that. So that's probably about the best trade I could see at the moment, but I don't even know if it's going to go that way. I know that we can look at this here as an A wave, a B wave, and a C wave, which we have, and I think we talked about that last time. So that means technically we should be taking out that top there. But speaking of this being an ABC correction, well then we've got this as an ABC correction as well. So technically we need to take out the bottom here. So we're going to be ducking and diving here, and there's different ways to look at this. My good friend Percy, the Crypto Percy, or Crypto Rose, I'll call him, he's saying that there's a good chance for this to move lower here in a B wave to here. So basically an A, B and C wave moving to, well, this is the 50-60% retracement level at that point. I better just double check that too for myself. So taking that, yeah, so that's the 56. So what we could also say too is we could say, well, when we're talking about this here, we in the 61.8%, we could always gravitate over to the closest largest number, which is 35, and in regards to the trading levels, which is just the Fibonacci as a price ratio. So between 30 and 40 here, we got 1, 2 and 3 that make up group 1, 5 and 8. So 1, 2, 3, 5 and 8. So we know 5 is the second strongest number. We know that it's important over here. So we could say to ourselves, well, if that 35 becomes the retested resistance here, then we could look to short at that point. So we would need to see that, and that can happen in 2 different ways. It could be nice and clean like this, if that's 35,000. You can always expect a bounce to come off these large numbers, anything with a 00 or 0 or whatever, big number, some bounce, you know, short covering and buying and all those sort of things, and then coming through. We don't trade the breakout because we know that, you know, 90% of the time that level's going to be retested. And this is kind of what we're looking at the 40,000, you know, same thing. It came down here, bounced off there, came down. We're looking for it to retest it. We're only in here somewhere. But anyway, if that was the 35, you know, it may just come back and retest it and drop from that point. So that low is important. The second low is important, but most of the time it will pop above the top there. So, and this is more of a common pattern here. So when it comes back up here, we've got that low and that low that we can go short on, but most of the time it pops above the level. So then we have to go through the process again. So down here, that would be the arrival, and then there'll be a bounce off there. So the arrival here, the reaction. So the arrival here, the reaction here, and then the first low below the level, then the ABC pattern. It may or may not go back above the level, but it doesn't matter. It doesn't matter. We just keep working up from the lows that way. It's not the best not the best trade on the books, but it's certainly one of the safest. So that's always good. So if the 35 is breached, then we know we've got half a silly chance of the market continuing down at that point, because we could probably look at this too as, you know, as an ABC pattern here, and then down for one here, and some type of corrective pattern, not taking the high out at this point, and continue down, you know. So there's a few things that can happen. I don't know what's going to happen, so that's my thing today. I don't know. If I knew, I would say it. If I don't, I have to say it as well. So, you know, as far as this goes here as an A wave here, and this, Percy's wave B over here at the 61.8% mark, or my one over here. It doesn't matter who's right or wrong. It's just sharing ideas. And then it's just 1 and 2 and 3 and 4 and 5 up at that way. And if the B wave is over here, then we can also look for 5 waves up that way. But while it's above the 35,000, then we have to look to the upside. If this level here became the resistance, then we can be to the downside. And when this market does move, if it moves up through here, hopefully, just hopefully that it trades above there'll definitely be some sort of corrective pattern here. If it trades up here, well, then that's really good for us, because any short traders, then because it's traded above the level here, then we'll do the same thing. If it comes down and bounces off here and then ends up coming through here and then retesting it, then we've got our short trades over here. So at the moment, we're sort of between a rock and a hard place, as they say. So we just have to be patient and pick our times, and, you know, you have to have confidence in what you're doing. Don't just go pushing buttons. You don't have to be in the market. Being in cash is a position, and sometimes it's safer like that. So just move when you know, and when you don't know, don't do anything. It's pretty tricky to be honest with yourself, and, you know, this is, once you've got money near the market, you know, it gets emotional, and once it's in there, it gets very emotional. So it's tricky business. Alrighty, I'm going to leave it at that. Thanks for tuning in. Cheers.